Welcome back to this third video. In this series, I'm teaching you all about how to do accounting in the real world, and I'm teaching you through project-based learning in which we create a fictitious company and we look at how to handle common transactions that a brand new company would typically expect to experience in their first year of operation. Now, if you have not seen the previous videos, make sure you go back to the very first video, because in that video I show you exactly how to use the Excel workbook for this course as well as where to download it. And you're going to need that workbook in order to follow along with this course. Lastly, if you haven't hit the subscribe button, hit it now and become a student of this channel. Also hit the notification bell to be notified when I post new content. Alright, assuming you've done that, let's get into this video. If you remember from the prior videos, we're setting up a brand new company, and this company is going to sell coffee mugs. In the first two videos, we looked at how to handle transactions when you invest your own money, as well as when you go to a bank and you pull out a loan. In this video, we're going to take a look at how to record a transaction when your company needs to buy a fixed asset. And in this specific video, we're going to look at how to buy a truck, for example, and we're going to use that truck in this company in order to transport our inventory. All right, let's take a look at this. I'm on my computer screen now. Scroll down, make sure you're on the journal entry tab and scroll to JE number 3. And I will zoom in so we can read this together. Okay, date March 1st, 2020. Before you can start purchasing inventory directly from the manufacturer and selling them to wholesalers, you'll need to buy a truck in order to transport your unique coffee mugs. You find a used truck for $10,000 that you plan to use for the next 5 years. Okay, let's talk about this. The company right now only has cash. We now want to take that cash and we want to buy another type of asset, and that asset happens to be a fixed asset or a truck in this case. So let's go to our journal entry now, and before we do anything, let's take a look at our general ledger tab. In our general ledger tab, it has all the general ledgers that I've set up for this course that we can use in our journal entries. And I've categorized all the different types of accounts so we can know which ones to use. We already know cash. If we go down and we see the other kind of asset accounts we have, we see there's a list of fixed assets here. I have one for auto, building, office, LHI, that's also known as leasehold improvement. Don't worry about that for now. And also equipment. Well, since we're buying a truck, we'll use this account here, the fixed asset auto. And we know that this is an asset account, and if you remember in the previous videos, when you have an asset and that asset increases, it's a debit. And if you weren't sure and you need a refresher, go to this cheat sheet as much as you want and this should help you. Assets that increase is a debit. So let's go to our journal entry now. We'll put in the post date for this journal entry, and this is just good habit because anytime you're in an accounting system, you always need to put the date of the transaction. We'll pick the account that we're using, and that's going to be our fixed asset auto. We'll put a memo so we know what this transaction was for specifically. We'll say purchased truck 10,000, and we now know this is a debit. Okay, so what's the other side of this entry? Well, in order to get this truck, we had to give up cash. We had to take cash and we had to purchase it. So in the previous video, we added cash into the company, and an asset like that increases is a debit. So in this case, we're dealing with cash now, but we're pulling cash out of the company. And when you decrease an asset like cash, it's going to be a credit. So we'll come down to the second line, put in the post date, and now let's make sure we select the cash account. I'm just going to copy the memo above it, and I'm going to put in $10,000 credit, basically saying our cash went down by $10,000. So the next step is let's follow this transaction through our general ledger. The first thing you'll notice is if we look at our cash account, in the prior two videos, we were adding cash to the company. So we were seeing cash come in. In this transaction, we're actually purchasing something, so we're seeing cash go out. And the way this general ledger is set up is to show the activity of the debits and credits for each general ledger account. So we actually can see right now we have a total of $10,000 worth of credits that were booked to our cash general ledger account, bringing the total balance for this general ledger account to $140,000 debit balance. And if we just look down here a little bit further, we see, I'll scroll in a little bit, we see our fixed asset auto now has a debit balance of $10,000, representing that purchase of that truck, that fixed asset. Next, let's follow this to the financial statements. We know the income statement at this point is going to be blank because we didn't sell anything and we haven't incurred any expense. We bought a truck, but it's not an expense yet, and we'll talk about that in a later series. Let's go to our balance sheet now, and let's take a look at this. So we have our total assets is still $150,000 because all we did is we took some cash and we bought this truck, this fixed asset truck. So really, our assets haven't changed. We just took some cash and we bought a $10,000 truck. So our total assets is the same. Now, if we go down to liabilities and shareholders' equity, we'll see there's been no change since this video. And if we look at total assets equals of $150,000 equals total liabilities and shareholders' equity of $150,000, which satisfies our basic accounting equation, which we can see here, which is assets equals liabilities plus equity. And the last part of this video is we have recorded a journal entry that impacts two balance sheet accounts, cash and our fixed assets. So we need to make sure that we update our schedules for these balance sheet accounts. Okay, I'm going to go to our cash schedule that we've been working on. And I'm going to click here and I'm going to put in the transaction date, which was 3/1/2020. I'll put in the type. This was a payment. In the memo field, I'll put in the same thing we put here. And for this, the way this schedule is set up, we'll need to show a negative. So we'll put a $10,000 credit in this schedule. And that will make the total of this schedule equal $140,000, which equals our general ledger account. So our schedule is reconciled to our general ledger account. And lastly, we'll need to create a schedule for our fixed asset. So scroll over and you'll see this tab called fixed asset. Click on that tab and here we go. We have a schedule that we can use to fill in our fixed asset. So fixed asset type is an auto. Description, I'll just say this is a truck. The purchase date, 3/1/2020. The amount, $10,000. The estimated life, I'll say this is 5 years. And then you'll see there's columns here for monthly expense, depreciation expense, accumulated depreciation, and net value. Now these, we're not going to record depreciation in this video. We'll do that in a later video in this series. But for now, we just wanted to set up this schedule to track this fixed asset. Because a lot of times in the professional world, you might have a balance sheet. You might send a balance sheet to a CEO or CFO, and they might, say, "Oh, fixed assets, it's up $10,000." Well, what's making up that $10,000? Well, in the real world, it might be $1 million. It might be a much larger number than $10,000, and you can't tell specifically what's driving that, say, $1 million. So you would have a schedule that says, oh, well, here's the schedule. That $1 million, it's made up of this equipment, it's made up of this building purchase, this truck purchase, And that's what you use to support your numbers on the financial statements. All right, so that concludes this video. I hope you got a lot out of it. Like always, if I was talking too fast or you didn't get everything, feel free to watch the video, but don't get hung up on anything too much, because my goal for you is, as we continue to go through this, you'll just kind of pick it up like a second language. Other than that, thanks for watching. See you in the next video.